Exercise 1.15. The given information for the accounting period ending on 28 February 2025 with comparative figures for the previous period is taken from the books of AB Limited. Required 1.15.1. Prepare the notes for the reconciliation of net profit before tax and cash from operating activities on 28 February 2025. 1.15.2. Prepare the complete statement of cash flows for the year ending 28 February 2025. Where notes are not required, calculations must be shown in brackets. 1.15.3. Calculate the net asset value per share on 28 February 2025. Information 1. Extract from the Statement of Comprehensive Income on 28 February 2025. Revenue, depreciation, interest on loan, and net income after tax is given. We need to calculate the income tax at normal company tax of 28%. Number 2. Extract from the Statement of Financial Position on 28 February for years 2024 and 2025. They give us the ordinary share capital, retained earnings, non-current liabilities, current liabilities of trade and other creditors, bank overdraft, non-current assets, and our current assets of inventory, debtors, and cash equivalents. Notes to the Statement of Financial Position. Note number 1. Ordinary share capital. Authorized 1 million ordinary shares. Issued 700,000 ordinary shares in issue at the start of the year. 320,000 ordinary shares issued during the year. 180,000 shares bought back during the year, which we need to calculate. We'll do that by working backwards. And then 840,000 shares in issue at the end of the year. And then it's worth 2,007,600 rand. 2. Trade and other creditors. Again, 2024 and 2025's figures are given. For trade creditors, income received in advance, shareholders for dividends, and SARS income tax. Note number 3. Fixed assets. Again, 2024 and 2025 figures are given for land and buildings, vehicles, and equipment at book value. A new vehicle was purchased during the year for 530,000, and an old equipment was sold during the year at carrying value. Note number 4. Trade and other debtors. Once again for 2024 and 2025, trade debtors, accrued income, and SARS income tax is given. 3. Additional information. The dividends that were owed on 28 February 2024 were paid on 15 March 2024. The interim dividends declared and paid during the year amounts to 44,000 rand. During the year, 180,000 shares were bought back. Okay, once again, we have to do calculations. The first thing we need to do is draw up an appropriation account. Firstly, we have to start with a format. On the debit side, we'll have income tax. We'll have ordinary share dividends. And we will have our retained income. On the credit side, we will have our profit and loss accounts. So this is firstly the format that we need to study. Then our profit and loss account, that will be your net profit before tax. They said net income after tax was 864,000, and that income tax at normal company tax is 28%. So 864,000 times 100 divided by 72 to work backwards gives you 1.2 million rand. So that will be our net profit before tax that goes to your profit and loss accounts. So it means that your credit side will equal to 1.2 million, and we must also make it equal to the debit side. Then on the debit side, your income tax we need to calculate. So the income tax will be the 1.2 million, which is our net profit before tax, times 28% to give you 336,000 rand. ordinary share dividends. If we go back to the question, at additional information 3, an interim dividend was declared and paid of 44,000 Rand, and our shareholders for dividends for 2025 is 42,000 Rand. So 44,000 plus 42,000 gives you 86,000. The retained income, I've marked it with a star, will be your balancing figure. So 1.2 million Rand minus 86,000 minus 336,000 will give you 778,000 Rand as your retained income. Then your retained income account, again you start with your format. You'll have your balance brought forward on the credit side. You'll have your appropriation account on the credit side. And remember, that is the amount that we've just calculated, the 778,000. So we can fill that in. And then on the debit side will be the amount that we paid. Again, it will be a balancing figure, and it will also be your balance carry over. Your balance brought forward, if you go to information number 2, in the beginning of the year is 256,000. And at the end of the year, 734,000. So if you add the credit side, 256,000 plus 778,000 gives you 1,034,000. You make it equal to your debit side. So your bank will be your balancing figure if you work backwards, and it will be 300,000. (1.15.1) Reconciliation of net profit before tax and cash generated from operations. We are going to start with our profit before tax, which is 1.2 million Rand. Then we add adjustments relating to depreciation. And our depreciation is 263,000 from information 1. Also our interest paid, and that amount is 102,000. So if we add those two amounts together, our adjustments is then 365,000. If we add that to profit before tax, then our profit from operations before changes in working capital amounts to 1,565,000 Rand. Then changes in working capital, we will consider inventory, debtors and creditors. For inventory, if we go back to information 2, in 2024 we had 630,000 Rand, and in 2025 we have 450,000. So it means we have a decrease in inventory. 630,000 minus 450,000 to give us 180,000. This amount is out of brackets because it's an inflow in cash. Then for our debtors, remember we have to go back to note number 4. We have to consider the trade debtors and the accrued income for 2024 and 2025. So for 2024 it's going to be 19,500 plus 15,300, and in 2025 it's going to be the 34,000 plus the 23,300. So we will have an increase in debtors with an amount of 22,500 in brackets because it's an outflow of cash. For our creditors, we will go back to note number 2. Remember, we consider the trade creditors and the income received in advance for 2024 and 2025. So for 2024 it will be 20,000 plus 34,000 Rand, and for 2025 it will be 68,010 Rand plus 23,040. So we will have an increase in creditors, and it'll be 37,050 out of brackets because it's an inflow of cash. So our changes in working capital will be our inventory minus our debtors plus our creditors to give you an amount of 194,550 Rand. If we add that to our profit from operations before changes in working capital, our cash generated from operations will then be 1,759,550 Rand. 1.15.2 Statement of Cash Flows of ABC Limited for the year ending 28 February 2025. We start with our cash flow from operating activities, and our cash generated from operations will be once again the 1,759,550 Rand. We then record the interest paid, and the amount was 102,000. The amount is in brackets because it's an outflow in cash. Dividends paid. If we go back to information 2, the amount owing towards dividends is 67,000 plus the 44,000 that was declared as an interim and paid. So 67,000 plus 44,000 will give you 111,000. The amount is in brackets because it's an outflow of cash. In your income tax paid, remember you have a calculation. It's going to be your opening balance plus the amount that you paid in your income tax in your income statement for income tax, which is the 336,000, and then we're going to add our closing balance of 21,000 because SARS owes the company 21,000 at the end of 2025. Then this gives us an amount of 370,000 in brackets because it's an outflow of cash. So the cash flow from operating activities is then 1,176,550 Rand. If we add the cash generated from operations minus the interest paid, minus the dividends paid, and minus the income tax paid, you get the cash flow from operating activities. Cash flow from investing activities. We start with our purchase from our fixed assets, and according to the question, we purchased 530,000 Rands worth of vehicles. So that'll be in brackets because it's an outflow of cash. We then also consider the proceeds from selling of fixed assets. Now remember, the proceeds from selling of fixed assets, you can do a calculation on the side, or you can do the ledger account. You start with your opening balance, you add any purchases, you minus depreciation, and you minus your closing balance. So 2,335,200 is the opening balance. We add the 530,000 assets purchased, we minus the 263,000 depreciation, and we minus our closing balance of 2,402,200 Rand to give you an amount of 200,000 Rand. So our proceeds from selling of fixed assets is 200,000 out of brackets because it's an inflow of cash. So our cash flow from investing activities will then be 330,000 Rand in brackets because you say the negative 530,000 from your purchases plus the 200,000 from your proceeds from selling of fixed assets to give you a bracketed amount of 330,000 Rand for cash flow from investing activities. Then cash flow from financing activities. We start with our proceeds from shares issued, and that was given in note number 1 from the statement of financial position as 832,000 Rand, out of brackets because it's an inflow of cash. Our shares repurchased. Remember, we've got to go back to note number 1. The shares bought back during the year, the 180,000 shares bought back during the year, is a question mark. So to work out that amount, we work backwards. So we're going to take the shares issued, that amount issued at the end of the year, minus the shares issued during the year, and minus the shares at the start of the year. And that will then give us an amount of 434,400 Rand. So our shares repurchased is the 434,400 Rand plus the 300,000 Rand that we worked out in our calculations in the retained earnings previously. So then we have a total for our shares repurchased as a negative figure, 734,400 Rand, because it's an outflow of cash. Then our increase in our loan in 2025, you can see there's an increase in the loan. In 2024 we started with 850,000 and now our loan is 913,450. So there's an increase in our loan with 63,450. It's out of brackets because it's an inflow of cash. So our cash flow from financing activities will be our proceeds from our shares issued minus our shares repurchased, and we add our increase in our loan to give us an amount of 161,050 Rand as an inflow of cash. So our net change in cash and cash equivalents will then be the cash flow from operating activities minus the cash flow from investing activities and adding the cash flow from financing activities to give you an amount of 1,07,600 Rand. Our cash and cash equivalents at the beginning of the year is 150,000 in brackets because it's an overdraft, and our cash and cash equivalents at the end of the year is 857,600. .15.3, calculate the net asset value per share on 28 February 2025. To calculate the net asset value per share, we're going to start with our shareholders' equity and we're going to divide by the number of issued shares. Now remember, your shareholders' equity consists of your closing balance of your ordinary share capital at the end of the year plus your closing balance of your retained income at the end of the year. So we're going to start with our formula, which is shareholders' equity divided by number of issued shares times 100 over 1. Our shareholders' equity consists of your ordinary share capital at the end of the year, which is 2,07,600, plus your closing balance of your retained income of 734,000. And our issued shares at the end of the year is 840,000 shares. If we do that calculation, we then get an answer of 326 cents per share, and that is our net asset value per share.